that with a company like Energy Transfer, I don't necessarily know. I would buy it for the capital gains. I wouldn't buy it to write covered calls on. I mean, it, in the dividend. I know there's a dividend in there too. I think you'd have to own a lot of shares to really see um, something that really generates the kind of income that kind of takes you to the next level. Whereas with riskier assets, if you're willing to kind of ride the Bronco a little bit and just stay calm and cool and collected, riskier assets are not so terrible, especially if you buy them in a group. The key idea is diversification. So if I have 10 risky assets that are in my portfolio, then when one of them goes up, one of them goes down. When one goes down, one goes up. And if there's a meltdown, I can just sort of wait out the storm and be patient. Everything's okay. Now let me let me look here and see what the market's doing now. I know that it fell 700 points earlier. Oil has dropped by 8%. What you're really seeing right now is you're seeing the makings of a recession. You're seeing a recession kind of happening right before your eyes. And it's not so much what's really interesting about this is that it's not the recession that's causing all this market chaos. It is the expectation of a recession. That's what's so crazy about the stock market. The stock market really is a psychological animal. If investors expect danger on the horizon, then there will be danger on the horizon. If they expect the economy to fall apart, then they will ruin the economy because everyone. So think about it like dating, right? Think about it. Imagine if you every day, every time you went on a date, you probably know people like this. You ever have somebody that is so skeptical and negative that if they go on a date, it's gonna mess up because they're gonna do something to mess it up. They're going to sabotage, because maybe he believes so badly that women are horrible animals that can't be trusted, or she believes so vehemently that men are all dogs that she creates the environment where she's going to get dogged just so that it pours into her pre-existing theory that men are dogs, right? Where people write the end of the story before the story even begins. Well, that's what in psychology they call that a self-fulfilling prophecy. Well, the stock market is full of self-fulfilling prophecies. When investors start to get negative and they start having negative sentiment and they start expecting the world to come to an end, well, then you start seeing prices dropping. You start seeing all these economic mechanics start falling apart because when prices start dropping, you start having margin calls, which means that people start hitting these areas of financial distress. Like, remember, almost like little economic fires. And to put out the fires, they sometimes have to start selling assets, which drives the price down further because everybody's sort of doing a run on the bank, so to speak. Everybody's selling, everybody's getting out. That's what's happening in crypto. A lot of your crypto investors are exiting the building. That's not going to help the price of crypto. Crypto doesn't have, sure, they've got the people that are deeply committed and believe crypto will survive no matter what. Those loyalists will always be there, but a lot of people wasn't there to be loyal. They were there to make a fast buck. So they're all exiting the building. So that's pulling down the prices even further. So right now you just kind of have the makings of an economic storm. Um, when's it going to end? Nobody really knows. But if you have that courage to kind of go in the opposite direction of where everybody else is going, then you have a better shot of making money long term. I think that with crypto, I've become a net buyer of Bitcoin and Ethereum. I'm not really messing with a lot of the riskier cryptos right now. I just don't want to do it because there's too much uncertainty. The SEC just ruled that Bitcoin was a commodity, which was big because they that's different from XRP. They ruled XRP was a security. That's a problem because then XRP became an unregistered security, which is why XRP has been in economic jail for the last, X number of years. Bitcoin, by being ruled a commodity, it means that they can kind of, sort of live in this world that they live in where there's all this speculation and everything else, and they're not really going to mess with Bitcoin. So what I'm thinking is going to occur, what it reminds me? It reminds me of like when they did the war on drugs and they knew all these drugs, billions of dollars in drugs were coming into the country, but they weren't arresting any of the kingpins, because they were kind of too big to fail. So they wouldn't go after the big Colombian drug cartels and the corporate executives that were running drug empires. They would go after the corner boys. The corner boys were easy targets. Corner boys look like us, unfortunately. That's why so many black men went to prison. But they never stopped the drug problem. because they didn't really actually go to the source. So in the case of crypto, I believe that Bitcoin is the kingpin. They're not going to really mess with the kingpin, but these little corner boys going to get wiped out. These fly by night crypto schemes. There's a lady that they call the crypto queen who's now like on the FBI's most wanted list or something. She made $4 billion, and I guarantee you that 2 or 3 years ago she was probably hanging out with politicians and regulators and people that made her feel like she was a wonderful pillar of society and that she was doing nothing wrong and that she was an example and a role model for all little girls who want to be billionaires. Well, there's a thin line between being admired for what you're doing and being seen in a negative or criminal capacity. All that has to typically occur is for people to start losing money. So once people start losing money and these coins started dropping in value, some of them disappearing, then suddenly it's like, we got to go get this person and lock them up because they were doing something wrong and illegal. So the definition of what is ethical and what is legal tends to change based on existing economic conditions. If you and I are in the car and you're driving 90 miles an hour and you swerve a little bit, we might laugh about it. I might say, "Whoa, slow down, be careful, you're crazy," blah blah. But then if we survive, it's okay. It's like, "Whoa, remember that time where you swerved the car? We were going 90 miles an hour. You crazy boy, right?" But imagine if you hit a tree, and somebody gets paralyzed from the neck down. Well, then that becomes a different situation. Now you're a criminal. Now you're a terrible person, right? And so ultimately, that's kind of what crypto was. Crypto was driving 90 miles an hour down the economic highway and swerving and having fun. Now the car has flipped over and crashed and blown up. Now they're going back and saying, who was responsible for this crime scene? And that's why you're going to see a lot of cryptos disappear. You're going to see a lot of congressional hearings that will take place. You're going to see new added regulations, and you're going to see some people going to jail. That's how the financial world kind of works, oddly enough. All right, so let me see here. Let's see, Jessica. I'm signed up to take your options course. Would it be better to take my money out of regular stocks that I already have and then sell options after what I've learned in the options course? No, Jessica, you should not take. You should think of your investments as different categories, right? So you should have. It's like I had a friend who was interesting. She was honest with me about her feelings toward men, and she realized. I said, you've been divorced twice. Like, how did you do that? Well, how did that happen? And she said, I realized that one husband wasn't enough for me. She said, I didn't want to sleep with a bunch of men, but I needed different kinds of men that could fulfill different needs that I had. So I'd have one guy that is the guy I want to sleep with, but then I'd have the guy that makes me laugh. And then I'd have the other guy that I call when I want to have intelligent conversations. And the other guy I might call if I want to go out and have fun, right? And so in a way, not to say that you can think what you want about her dating preferences, but really with investing, I think it's kind of okay to think the same way. So if you're a stock investor, remember there's different kinds of stocks out there that you can own. So what you might want to do is consider having different portfolios. So the way I invest is like this. I have my safe, never touch investments that I put in money into every week that I'm not going to touch until I'm old and gray and I can't work anymore. And then I have my medium-term investments where I might sell or buy, but I'm not doing it that frequently. I might go in there and pop in maybe once every 6 months to a year and rebalance or add or whatever, right? That's part of my capital base that I might access if I want to make a real estate move or whatever. Then I have my shorter term investments that I damn near my day trade, where I might go in and decide on a Tuesday that I want to get rid of this stock and buy more of that stock because I read something that got me excited about some kind of investment. And then I have my portfolio that generates my income. That's where I own the stock specifically so I can sell the options, right? So because I sell the options every week and I generate my income. And again, that's what we're going to cover in the masterclass next week. Again, if you want to sign up, just go to boycewatkins.com and you guys can use that discount code Stock Market Class and get 30% off. But basically, that options portfolio consists of riskier stocks that pay a premium that works for me and generates the income that I want. So it's like these are the chickens where I don't really care about selling them to KFC. These are the chickens where I sell the eggs. But then I have other chickens that I raise that I'm going to sell to KFC. They're a different breed of chicken. And then I have chickens over here that I'm raising so they can breed other chickens. And then I have chickens over here that I just really love and care about, and they're like pets. I'm never going to sell it. I'm never going to eat it. And then I have chickens over here that I might eat. Right? You understand what I'm saying? So there's different with stocks. There's different use for different kinds of stocks. Just like there'd be different uses for different kinds of chickens based on the preference. Or like my friend had different uses for different kinds of men. And I thought that was an interesting perspective on relationships. Yeah, she actually I think she might have got divorced 3 times. And yeah, that was a real interesting conversation to kind of hear her perspective on that. And let's be honest, but there are probably a lot of people that think that way, just too scared to admit it. So I have a lot of respect for that. All right. So King May, Disney and Apple were down. Would this be a good time to buy? What is the lowest amount you need to sell covered calls? Okay, so that's 2 separate questions. First question is, Disney and Apple are down. I tend to believe in Disney. I tend to believe in Apple. Apple's doing better than Disney in general, but they're both very good at making money. I think that companies that are run by smart people that are good at making money are the absolute best investments you can make in this economy. They're the companies that are going to survive. Those are the companies that have enough in terms of assets and liquidity. I remember a lot of what drives a company's ability to survive stuff like this is how much cash they have on hand. Like think about it. If you're going through an economic crisis in your life, and let's say that you lose your job and you have no income, well, imagine if you just knew that you had a credit card that had a $50,000 limit that you could turn to in the case of emergency, or you had an uncle that said, look, hey, if you need to borrow 10 grand, just give me a call. That's not your money. It's still a loan, but at least it gets you through. It helps you survive the economic storm. So the question people ask with a lot of companies is, well, how much cash do you have on hand? How much, do you have enough money? Do you have enough water, liquidity to put out your economic fire or to get through the storm? Some companies don't have it. More companies die from a lack of liquidity than die from a lack of profitability. Every year, there are insanely profitable companies that go bankrupt. Happens all the time. But then on the other hand, there are companies that can lose money for a decade and still be in business. This is how important access to capital is. This is why I was really happy. My buddy Ice Cube, I don't call him my buddy. He's not my buddy, but he's my friend. We are friends. And I was so happy that Ice Cube made a deal with the NFL to help Black businesses not just get access to the opportunities that come with the NFL, but he's helping them to get access to capital. And it was great. Like we had great conversations when we talked about that. And I said, he gets it. He gets it. He gets it. He's not just talking about, just talking about police brutality and all these other things that are important. They do matter. But, if you allow Black businesses and Black people to get access to capital, that is a game changer. Because we're getting the financial literacy. We're learning economics at a high level. We're learning economics better than white people, Jewish people, Arab people, Asian people, everybody on earth. Like this, what we're getting in this space is creme de la creme, second to none. Take it from somebody. I've taught the smart Jewish kids. I've taught the Arabs. I did all that at Syracuse. No, you're getting creme de la creme training on economics in here. You are becoming like the economic equivalent of Navy SEALs with the kind of conversations Black folks are having right now. Now all you need is access to resources. It's like giving a great basketball player access to a court and a basketball. Right now, you're gonna go in there. You're gonna be dunking on everybody. I'm not kidding. Especially with what some of you are doing with your kids and everything else. So access to capital is critical, because if you give a smart person, a smart, economically intelligent person, access to resources, they can take that 10 grand and flip it into 100. They can take 100, flip it into $1 million. They can take an NBA player's salary, a $100 million contract, and make him a billionaire off of that. It's easy to do if you know what you're doing. Okay, so this is a really great opportunity, and I just give so many props to Ice Cube for what he's been doing, and the fact that he's one of the first prominent people to go in and really say, let's talk about the money. Let's talk about the black economics. And he got that from Dr. Claude Anderson. He and I are both big fans of Dr. Claude Anderson, and that's how we became friends. All right, so let me keep going. What is the lowest amount you would need to sell covered calls? Well, King May, there are some people that are coming in that maybe have the money to invest right away. Some of them may not have the money to invest right away. That's where the training on how to form a family investment club is there, because if you can get some relatives that can help you to make those first investments, and I can show you which assets where to put the money and stuff, or where I'm putting my money. How about that? Then that's a great, easy, straightforward way to make money. That really is. I do that with my family. Like literally, when my relatives saw what I showed them, it was like, okay, here, look, if you do this and then you do that, and this is how you make. When I showed them that, they were like, how do I get in? How do I get in? So basically, I have relatives that said, here, give me, here's some money. Can you turn it into more money? And I'm like, yeah, absolutely. So ultimately, I would encourage you, if you don't have all the money that you need to do what you want to do, to maybe consider that investment club approach, especially if you have loved ones that want to get their money a little more active. But I really want to make sure that I impress upon you all throughout the training camp that there is risk involved. Okay, so understand, anytime you invest, there is always a chance you're going to lose money. There's very few examples of a risk-free investment. So there's ways though to measure risk, ways to calibrate risk, and so that's something that we're going to cover pretty extensively. That's something that I think about a lot. And also, in fact, when I allow my loved ones to give me their money, what I did was I structured the deal so that I took on all the risk. And so what I would do is I'd say, look, if you want to invest this amount of money, I'll pay you this much in interest, and I would give them a really generous rate. And you're gonna get your money back, and you're gonna get your money back because you've known me since I was little, and you know where I live, and you know where my mama lives, so I'm not gonna run off with your money. And if anything goes bad, that's gonna be on me, right? And because I know how to calibrate the risk, I know it's not gonna go bad, right? So you can decide how you want to structure it. There's other ways to do it, but I found it's better to do it that way, where I say, look, just tell me how much you want to invest, and I'll go do what I do. I don't want to spend 8 hours explaining to you exactly how I'm doing it. But there are some people in my family who are like, I want to know exactly what you're doing. So it depends on sort of who you're dealing with in the situation. All right. So Sheila says, Dr. Boyce, thanks for sharing your knowledge. What is meant by leverage stocks such as Gush? I don't know about Gush. So Sheila, if you ask about it, put that in the Q&A for next week, and I will look up Gush. And I will tell you everything I know about the company based on my research. I'll research any stock you guys want me to look up. Just log into the blackstockmarketprogram.com. Up in the Q&A section, just click on that button and leave the question. I'll definitely look into that. Let's see here. The next questions from Nikki P. I have a state retirement index fund that has a rate of return that has dropped down to negative 10%, the highest I've seen so far. At what percentage should I become concerned? If so, what should be my next option? Hold or move the funds? I wouldn't really move the funds per se. I would probably ask them what you're invested in, and remember, everything's down. Everything's down, and if it's only dropped by 10%, that probably means that their risk level is pretty low. And that's what retirement funds tend to do. They're not going to go out and do crazy stuff with your money, but you may want to just look in and just see. They'll tell you a lot of times, like, okay, X percent is invested here, X percent's invested there, and so sometimes you may want a little more risk. Like right now, when I'm investing now, I'm actually looking for investments that actually carry a little more risk, because when the market recovers, those are going to be the first stocks to start exploding. Those are going to be ones that take off. The more balanced companies, they're still going to come along, just not as much. So it's a little bit of both, right? If you go safe, the benefit of the safe companies is that you have lower volatility in the short term. And you still get some upside. The benefit of the risky companies is that you have higher volatility, which is a lot more of this, but these companies tend to just react the strongest. Again, think about it like dating a crazy person. Has anybody ever dated a crazy woman or a crazy man? Or maybe some women like the bad boys, like you want to date a Tupac or a corporate thug and stuff like that. But better now, hopefully, because that guy might also kill you. Dating the crazy person can be fun, because crazy people are really interesting, right? They do crazy stuff, and it makes them exciting to be around. And maybe the sex is better because crazy people they're just good at stuff, right? But the downside is that things can go bad. So So the crazy stocks means that if you're an investor in crazy stocks and the economy goes south, you're going to get killed. You're going to get hammered. You put your money in Dogecoin. Now you lost it all. It's sad, right? It sucks. But, not to, this is not me advocating for investment in Dogecoin. I think you should stay away from crap like that. But you put your money in the crazy stocks now while they're down and they're depressed and they're on the bottom of the barrel. Well, guess what? When the market starts taking off, crazy stocks are probably going to move faster than everything else. That's what they call a high beta stock. High beta means that whatever direction the market's going, that stock goes above and beyond. Like it's double, everything else goes up 5%. This stock goes up 12%, that kind of thing. All right, let me keep going. Is there an app for my 14-year-old son? Asked Dwayne Jones. I know there's custodial accounts on Stash. If you put the question in for next week, I can look up some apps for your son. I don't have any that come to mind right now, but I know the Stash has custodial accounts. Justin says, if we have the Dr. Boyce Watkins Options Investing Masterclass and it's a bonus in the boot camp, is there a way to upgrade? Yeah, Justin, if you've already signed up for the Options Masterclass, and I included that for free in with the next boot camp where we're going to cover selling options instead of the buy side. We're going to cover the sell side and how to manage the risk, how to pick the right stocks, things like that. I included that masterclass because I wanted you to have access to the training that you need in case you want to get better at stock options in general. But if you already own it, then just send an email to support@theblackbusinessschool.com. We have an excellent support team. They will give you something of equal or lesser value for free. So that's something that we included for those of you that already signed up for the stock options masterclass. And don't forget, we get started on the 7th. And and you can go to boycewatkins.com. The link is right there at the top of the screen. And if you want to get that 30% discount we talked about earlier in class, which is only available for you guys, just put in stock market class. That's it's just all one word, stock market class, and you'll get 30% off. Now, what I want to do is I want to finish where we started. Okay. Like that song, that song, Get Right Back Where We Started From. I love that song. So let's get back to where we started from. Okay. Let's talk about, I mentioned to you guys, this is on my brain, it's on my spirit, so I'm sharing with you today because I think it's important. 2 reasons why people lose a ton of money when it comes to investing. These are 2 things that you guys will understand thoroughly that a lot of people do not. A lot of people make this mistake, and it costs the Black community trillions of dollars. A lot of your relatives are thick-headed. They're not going to listen. They're never going to get it. But if they do want to listen, you can tell them. If they don't want to listen, don't worry about it. Just know that this is true. This is verified from tons and tons of independent economic research. I'm a researcher in this. I've written research papers in this topic. And just to fill you in on this, professors, we don't read the textbooks. We write the textbooks. To do a research paper, you literally have to write and add something that is what they call a contribution to the knowledge base, meaning that you have to share an idea that no one else has ever shared in the history of the field. Like you literally have to tell them something that they don't already know. That's what I mean when I say I wrote a research paper. It's not just me writing a book report. It's really, really hard to do. So here's what I want to share with you that I really want you to internalize because this is so important. This is going to make a difference in your family generational wealth. It'll stay with you for the rest of your life. It's very important for you to know this. 2 reasons people lose a lot of money when it comes to investing. One is when they don't participate at all. A lot of you know people who have never ever made an investment. One of the biggest campaigns we had in the Black Business School for a very long time was what we called the first share of stock campaign, where I literally was like, let me see if I can get a few 100,000 Black people to buy their first share of stock. That's massive. And the reason it's massive is because when you look at the wealth levels and the wealth timeline of people who don't invest in the market, it stays really, really flat. Maybe goes down because of inflation and declining wages. It's a struggle. It's a grind. It's terrible. It makes life hard. Versus people that invest consistently in the stock market. The people that invest consistently in the stock market and don't sell their stock very often, those people become very wealthy. They reach the top 10% of all Americans. Some of them become millionaires. David Bach writes about this in The Automatic Millionaire. So the biggest mistake you can make in investing that will cost you the most money is when you don't invest at all. So anybody that you know that doesn't invest, they're probably not doing well financially. I guarantee you, unless they're doing stuff in real estate, stuff like that, which makes them an investor. But think about every person you know who doesn't invest in anything, doesn't invest in real estate, doesn't have a business, doesn't buy stock. they're probably struggling. They're probably struggling. They got some credit cards and they're living paycheck to paycheck from their job. Maybe they have some savings. You know, that might be an exception, but even savings is tough because it's being eroded by inflation. So you have to participate in this game. This is a very rigged game, but I want it to be rigged in your favor. So that's the number one mistake that most people make, and I want you to share that with anybody you love and care about. The second big mistake that a lot of investors make that isn't really discussed as much, I was thinking about this weekend because I was doing some research and reading stuff and kind of preparing for our options class on Thursday, is the way people have been brought into investing through stock options. So the game that Robinhood played with investors was really fascinating. What they did was they made investing into a casino and a video game. So they gamified the app. They made the app, you know, even when they drop the little confetti every time you buy something, right? It's like, hey, yay! That's them giving you little injections of dopamine. They're giving you the dope. They're literally dope dealers. They're giving you injections of dopamine to make you feel good because you just bought something or because you just made a financial move. And a lot of their money that they were making was coming from the trading of stock options. And what I found in my research is that many of the people that came in, they call them retail investors, that it got to the point, this is the first time in American history this has ever occurred, that where it got to the point that 25% of all the options being purchased on a given day were being purchased by retail investors making one-legged trades. A one-legged trade is different from what they call a multi-leg trade. A multi-leg trade is where you make a buy and maybe you make a sell because you're calibrating your risk, or you make two buys and two sells. You do a complicated strategy so that you it's almost like saying, like when you take a bath, do you turn on the shower and or the bathtub and only turn on the hot water? And what would happen if you took a bath and you did nothing but turn on the hot water and you didn't turn on any cold water? And what would happen? You would burn your butt alive. Or if you turned on only cold water with no hot water, right? What would happen then? Answer me in the chat. Bad things would happen, right? Well, that's kind of what happens when you make a one-legged option trade. When you only buy a call option that's out of the money, you're literally turning on the hot water. You're not turning on any cold. And so what they found was that 25% of the trades were being initiated on the buy side by retail investors for the first time ever, and they were making these one-legged trades that were losing money. So a lot of these Robinhood investors were getting killed. Robinhood did not care because Robinhood made money on every trade. They got what's called payment for order flow. So every time a trade was made, they just got paid by the company for sending the trade over and letting certain people execute the trade on their behalf, which has huge ethical questions, and a lot of people are really starting to wonder if that's a good way to do business. So effectively, what I want you to just kind of understand is that if you're going to participate in options, which I highly recommend, any good stock investor to participate in options, because it gives you a lot more options, a lot more things you can do with your portfolio that can make it just right for you. Again, like think of it like food, where you put seasoning on the food to make it taste just right. So versus food with no seasoning at all, and then you're kind of eating the way white people do. You know, they don't season their stuff right. And if you're white, I'm sorry to offend you, but y'all know it's true. And so, but the thing is, when you're putting the seasoning on, you have to put it on the right way. Right? So options, if you think of options as the seasoning, buying a call option with no sort of way to calibrate your risk is like somebody says, I need some seasoning on this barbecue, and somebody comes in and just dumps a bunch of cayenne pepper or something onto the barbecue. Or they just, get a ton, or they throw a bunch of cinnamon or something on there. They don't care what the seasoning is, or it's just one season, right? You don't do that, right? You maybe put a little bit of salt, a little bit of pepper, a little bit of butter, right? You kind of mix it, you blend the three to make sure one taste kind of softens the other, right? So that's the appropriate way to incorporate options. Options are a powerful tool to allow you to really accelerate your ability to expand the growth of your portfolio, to calibrate the risk of your portfolio, either increase it, decrease it, or remove it, and also to generate income from your portfolio. So so I'm a big advocate of the use of options in your investing, but the way it was being done was completely wrong. And also it was exploitative to some extent, because seasoned investors on Wall Street, they saw what was happening. They know that it's a sucker's move to always sit on the side and constantly buy out of the money call options. So you know what they were doing? They were selling the options. They were like, okay, well, if you're gonna bid twice as much for something because you want it so bad because your bros on the Wall Street Bets forum told you to go do it, well, fine. Who am I not to sell you what you're trying to buy? So as a result, you saw what was it really a fascinating thing in my view. On one hand, they are revolutionaries. You know, they're taking on the greedy pigs of Wall Street, right? You're taking down these Wall Street bureaucrats that are making all the money, but you're actually putting more money in their pocket because they got you committed to a sucker's move. They've basically opened up a nightclub where they're selling liquor, weed, heroin, and crack, and they've gotten you to come to the club and get high and have a good time, and they're sitting there encouraging you to keep on drinking while they don't drink at all. A lot of times you'll notice that people who own the club don't drink, but they want everybody drinking. They want everybody having fun because they want them to be in a mind-altered state so that they will give up their money. So don't be that person. Don't be that fool. I want you to be the rational investor. I want you to be the intelligent investor. I want you to be the disciplined investor. I want you to be the informed investor. I want you to be the prepared investor. That's how you win when it comes to investing. Okay. All right. So I hope that this conversation was helpful to you today. I enjoyed talking to you as always. We meet every Tuesday at 11 a.m. Eastern. If you have a question for me, go log in right now at theblackstockmarketprogram.com. Just go to the top, put your question in there. I will answer your question first when we come next week. If you have a question about your little cousin's investment that you're not sure about, or you want to know about a certain stock that you've been looking into, or you want to figure out what's going on in the market, or you want to ask me what size shoe I wear, I will answer any and all questions that are submitted by my students because I love you, and I respect you, and I appreciate you. Lastly, if you still want to join us for the boot camp that starts on the 7th of July, Thursday night at 8 p.m., we're going to meet for 4 weeks at 8 p.m. We're going to cover how to sell call options and also how to manage your risk, how to pick out the right stocks, how to adjust your portfolio every week. We're going to go through all of that. Go to boycewatkins.com. The link is at the top. And also, if you want to get that 30% off that I mentioned earlier, just use that code Stock Market Class, all one word, and that's a discount just for you. It'll be there for the rest of the day. All right, guys. So Stock Market Class, all one word. All right. So have a good day, everybody. God bless you. It was real, and I'll see you guys next week. Take care. Bye-bye.